Hello traders and welcome to another video review. Today is Wednesday, October 2nd, 2024. Let's find out what's going on the economic calendar for today. There was almost no overnight data worth to mention during the Asian session. What do we have here today in the London session are nationwide HPI data from the UK scheduled for release at 8 o'clock. Then we got the Spanish unemployment change scheduled for release at 9 o'clock. At 9:30 ECB the Windows will give a speech, and at 11 o'clock the Eurozone will release the unemployment rate. The unemployment rate is expected to stay at the level of 6.4%. ECB Lane will give a speech at 11:30, and then 15 minutes later German Vice President Buch will give a speech as well. OPEC meeting starts at noon. 1 hour later ECB Elderson will give a speech, and then 45 minutes later German Balz will give a speech. Plenty of speeches today is scheduled. Interest rate decision in Poland is scheduled for release at 2 o'clock, and the main event of the day, ADP Nonfarm employment change, is scheduled for release at 2:15. And then we got the speech from the Bank of England MPC member Pill. At 4 o'clock, 30 minutes later at 4:30, we got crude oil inventories. So again, one of the most important events for today, together with the Cushing crude oil inventories. And then at 5 o'clock, we had the FOMC member Bowman to give a speech, and that's about the situation on the US session. So pretty busy day. However, it looks like the US session will be much better and violate for the data traders. So let's start the technical part. We are going to switch to the euro dollar. Euro dollar 4-hour chart is showing us a rejection of the supply zone, just as expected, after the bulls were unable to rally above the level of 1.1214. We got very strong rejection of this zone, and we just tested the first technical support, important technical support, at 1.1049. So 1.1085 is now intraday technical resistance. 1.1114 is intraday technical resistance as well. The market is trading below 150 periods moving average, and the momentum is very negative and very weak, only 35 points. The next target for the bears is located at the level of 1.1003. It looks like the ABC correction here to the downside has not been the correction has been completed, but this situation here is something completely different than we previously thought. It looks like the overall corrective cycle has not been completed just yet. At least we could do some kind of a wedge here. We could do some labeling for the wedge. It doesn't actually looks that well, and I think that this wave 4 is now extended into more complex and time-consuming correction. So we are going to switch to the more complex labeling. We are going to do the Elliott double combo, which will be the wave W, wave X as a connector, and now we are possibly doing the wave Y. So let me just switch the 0 to the top. So we are start with this level, and as you can see, this movement here on this during this corrective cycle might be quite complex in price and time. So there's still something to be done here in the wave Y. So this is then the supply zone, and the market keeps moving to the downside. How the gold reacted to the recent news? As you can see, the gold market, if we switch to the daily time frame chart, is still doing the parabolic movement to the upside. If we switch to the 4-hour, back to the 4-hour, that's not the trend line, that's the parabolic line, and we can see that just recently we hit the 100 periods, 50 periods moving average, roughly around the 2668, and then the market reversed lower. The momentum is now at the level of 48 points only, so it's kind of a neutral momentum. But if we break below this local technical support 2624, the outlook might become more bearish, and we might even test the level of this. I think will be better for the technical support, 2580 and 88. So far it looks very good for bulls. It's still this is still a very strong uptrend with the new all-time high at 2685. More upside should be generated very soon. So we got this data from the gold. Let's see what the S&P 500 is doing, and on a 4-hour chart you can see on the S&P 500 that we've done the rally towards the 5,800 points. We got the rally towards this level, but the high was 5,772, and then we got pretty nice rejection to the downside from the extremely overbought market conditions. We went towards the level of 45 points only, but the technical support at 5,670 and 5,649 has not been violated just yet on a 4-hour chart, so the outlook still remains bullish. As you can see, this is the major situation here with the S&P 500. We're still moving higher, we're still moving up. If we get the extremes, we got this blue trend line here. Maybe I would change it to orange so we won't get confused. There you go. But we can clearly see bearish divergence. The local high and swing time high and all-time high at 5,772 was made on a way lower momentum than the previous high, which is why there's divergence between what the market is doing and what the RSI indicator is showing these days. So you can see the current situation is really is looking really bearish. And if we do something like this, let me just copy this line so I can show you what I mean. If we just do kind of a this kind of a there you go, you know what I mean, you know what I'm trying to show you, a wedge pattern. This kind of a wedge pattern, if we do it, then if we place it on the screen, then we can see straight on that we might be doing this wedge formation, and when the wedge is done, we should see something very typical that is done after this wedge is made. Let me just take a look. So we should see movement to the downside, so something like this, yeah, when the wedge is completed, and we should see the downside movement. I will make it red because it's all about the corrective movement to the downside. I'm not quite sure yet which level will stop this movement to the downside. However, this one at 5,098, yeah, 5,089, sorry, was quite strong movement, quite strong level that stopped the movement to the downside. So maybe we should focus on this one as the major one, as really major one. But before we will hit this level, we had some other levels here, technical support levels. Nevertheless, this kind of a movement to the downside, the movement out of the rising wedge, is very strong, aggressive and dynamic, which is why I'm mentioning this level here. We might see breakout below 50 and 100 periods moving average without any problem here on S&P 500. So please keep an eye on this market. Now let's talk about the Bitcoin, because Bitcoin is definitely out of the channel and below the demand zone. So right now the local low was made actually at the level of 60,129. Now we are trying to bounce from the extremely oversold market conditions on a 4-hour chart. So this zone here that used to be a demand zone might be now the supply zone, of course, and this technical support worked out beautifully. So we got the movement to the downside right now out of the channel. So channel is out of our channel is out of our chart, and yeah, there you go. This is the swing high I want to mention. This looks very strong. This downside movement, price wise, it is quite strong as well, over almost 10%, minus 9.50. So it looks like we got the major correction here, major pullback possibly done. We're waiting for the uptrend to resume on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.